All right, what's up traders? What's up tycoons? Super excited for today's video. We have the equal weight S&P 500 breaking out. We've got the equal weight NASDAQ breaking out, heading to new all-time highs right now. And we're getting that continuation pattern. We're starting to see some follow through in this pattern that I posted in the Discord and on YouTube a couple weeks ago. Now, everyone's panicking because the Magnificent Seven closed the week down around 2% almost. But the equal weight actually finished the week up 2.76%. So, we're getting that market breadth expansion that everyone was talking about. And now, as soon as we get it, people are panicking, starting to think that the market is, going to crash or something, right? But we're going to go over a lot of good charts. We're going to take a look at some ratio charts here, how they've been really good buy signals. We'll take a look at, some of these measurements of market breadth, such as the McClellan oscillator. We're looking at new highs, all right? The number of new highs that we've seen in the market from 1 year, 1 month, and 6 month just had a huge, massive spike. And we're also seeing a breakout on the equal weight versus SPY ratio chart here, as well as a breakout in the 52-week highs versus lows. Really good video, but as always, the content provided on today's in today's video and on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I actually started a completely free newsletter for you guys. It's called Investment Intelligence. I give out free, valuable finance, trading, and finance and trading related content. And I even try to sprinkle in some free trade ideas in there as well. So you can check it out. There's a website associated with it, so it's kind of almost in a blog format too. And you can go check out the website, see if it's something that you're interested in. And if it is, then you can sign up using that link in the description below and get those sent directly to your email inbox. Now, you can also join the Investment Intelligence private trading group. In there, you'll get access to the Discord community where I post over 20 plus swing trade ideas every single week. There's custom scripts and indicators. There's exclusive chart layouts. So all of the chart layouts that we're going to go over in today's video are actually chart layouts available to all of the Discord members. So that's really cool as well. You guys don't have to do the hard work of, making all these different setups and all of these things. They're just saved in there and you can quickly scroll through these within your own system, right? So really great stuff inside of there. I highly recommend joining the Discord. Now, let's talk about this, the equal weights, okay? We've got the equal weight RSP. You can see, we had previous resistance, all right? It doesn't get much more textbook than this, guys, right? You have old resistance, and what does it do? Becomes new support, right? Old resistance ends up becoming new support over here, right? And we test that zone, we break out of our trend line here, and we're going to look to see if we can get a sustained move to the upside, right? So, market breadth is looking good. We're getting the equal weight S&P breaking out. We're also getting the equal weight NASDAQ breaking out to new all-time highs here as well. Okay, so whether it's the NASDAQ, whether it's the S&P, the equal weight are looking good. And this is that continuation pattern we're looking at, right? You've got a bullish trend, and then you've got this consolidation period here where we formed a triangle pattern, right? We formed a nice ABCDE triangle. We're looking for the breakout for the RSP into new all-time highs. And ultimately, I think we can get by the end of the year, if not sooner, 176.50 on the equal weight S&P. That is going to be the target for the Fibonacci extension of this move. Now, the Magnificent Seven stocks, yes, they are pulling back, okay? They closed the week down about 1.9%. Now, is that the end of the world? No, right? We've already established a major uptrend, right? We've established that we're in a major uptrend, right? We're putting in lows, right? Then we're putting in higher lows. Then we're putting in higher lows. So if we were to come back and retest this zone right here, is that the end of the world for another higher low continuation of the uptrend, right? No, it's not. So the Magnificent Seven stocks can pull back and it's not going to be death to the market. Now, what's really nice is that the equal weight here closed the week up 2.76%. That's a strong move for an equal weighted index. And we see that it gapped up 3 days in a row and was able to continue sustaining that momentum. It's currently closing at overhead supply, battling that overhead supply. So we're going to look to see if the equal weight can, remain above what looks to be about 168, right? 168. Above 168, the equal weight looks bullish to continue heading higher. Now, this is a ratio chart here that we've got on the top. Okay, and our ratio that we're measuring is going to be the Magnificent Seven stocks divided by the S&P 500. So the ticker for this is MAGS divided by SPY. Now, what I want to point out to you guys is it's very common, and this chart does a great job of showing you that prior resistance oftentimes can become new support. Now, at each time where we made resistance and then retested it as support, if you were to buy SPY, okay, for a swing trade, those resulted in very good swing trading opportunities, right? Here's the first resistance, then retest as support, and you can see the SPX was around 5,200, and we ended up rallying very nicely 200 points higher to 5,400. Same thing over here, right? We have old resistance becomes new support. And if you were to buy there, right, it was a little choppy, but you buy there around 54.20, 54.30, and SPX ran up to 5,500. That was a good swing trading opportunity. And most recently, when we had resistance that we retested as support, the SPX went from about 54.50 all the way up to 5,600. So a really, really strong move. Those are great swing trading opportunities. So me personally, I'll be looking, all right, and keeping an eye out for a potential entry on the SPY if we were to do something like this, right, and come down and perhaps retest this zone over here, this old resistance as new support. Once again, I'll be looking at a potential entry into some SPY swing trading call options to see if we can get this buy signal to continue to work. Now, just because it's worked in the past doesn't mean it's going to work every single time in the future. So you do have to keep that in mind, but I do like the way it looks. And this is one of the factors that I'll be taking into consideration. And I think you should as well. Now, this is the McClellan oscillator right here, right? This yellow line here is 0. The McClellan oscillator measures market breadth. Okay. So, people have been talking about bad breadth for the past month or so. And, it has been there. We have been seeing bad breadth, but now we're seeing that breadth improve. And we are above 0 now on the McClellan oscillator. We want to see this continue to trend in the upwards direction. Now, what we've got here is going to be the number of new highs in the market. Okay, so we're doing this and we're measuring this on a 1 year, 6 month, and 1 month basis. Okay, and you can see we've got an explosive move higher on all three of these measurements of new highs. So let's keep things simple. Okay, the stock market, what is it? It's simply a market full of stocks. So for us to have good breadth, we want to see more stocks making new highs. When we were hitting all-time highs over here and moving sideways, notice how breadth was in the new highs. We weren't seeing a breakout in new highs. Some of these times we're actually seeing it go down, right? We're seeing it go down. That's not the case, right? Here we have a large expansion in the amount of new highs. Now, let's take a look at what happened last time that we've seen this, right? Last time we saw a peak in the new highs. What did we end up getting? Well, we ended up actually getting a little bit of consolidation and a pullback period. Now, why is this, you may ask? Well, because if you think about it and you take a look at a lot of these charts that we're seeing, right, and we look at the Magnificent Seven, we know that those hold a very large weight in the overall index. So if people are selling those stocks, right, the most important stocks in the market that have been pushing the overall index higher, to buy some of the other stocks and perhaps rotate that money into there, okay, you may see the overall index get dragged down lower because those stocks hold such an important weighting. But we are getting that good market breadth. We are getting that good expansion. And so as these people rotate money into some other names in other areas of the market, the other 493 stocks, we may continue to see some of the Magnificent Seven, if not all of those, continue to drop. Okay. But that doesn't have to be the end of the world. Lots of times when you see that, that's when you start seeing an increase in the amount of new highs, right? Again, which is what we're seeing here. So I wouldn't be surprised if we were to consolidate or perhaps even pull back a little bit, but continue to see good overall breadth with the amount of new highs being made across the market, right? You can see the last time we peaked, right? Even before then. So before this period here, where we went sideways, right? We peaked over here in new highs. And what did we do? We had about a 5% correction, 5% pullback in the stock market. So I wouldn't be surprised if we were to do something like that, move sideways for the next couple weeks, or even if we were to come back down and retest this key 54.36 level on the SPX, this is an area where I'll be looking for a potential entry on a retest to see if, again, we can come up and end up hitting these bullish price targets for the SPX above 5,700. Maybe by the end of the year, maybe it takes into next year. Who knows, right? We don't have a crystal ball, but what we do have is numbers. We do have data. And so we just run through the data and use it to build evidence. This is another way to look at the same thing. We're seeing the 1-year new highs. We're seeing a large spike in there. The 1-month new highs, large spike, and 6-month new highs, large spike. Okay, so we're seeing lots of stocks making new highs on a 1-month basis, on a 6-month basis, and on a 1-year basis. This is really good market breadth. This is what you want to see. This is what you will see in a thriving bull market. Now, we've got the equal weight breaking out here relative to the S&P 500. Why is this important? What does this mean? What are we looking at? Well, this is the SPY is our denominator here, okay? And the RSP is your numerator. So if this chart is going down, it means that the equal weight S&P 500 is underperforming the S&P 500, okay? Which is typically what you see due to the large weighting of, the Magnificent Seven stocks and the top, 10 largest stocks. But look at how strong this move to the upside was, right? We went pretty much completely vertical here and we are breaking out. So this suggests that, hey, we may continue to see this in the market, right? We may continue to see, the equal weight outperform the S&P 500, but that's just giving us that market breadth that people were asking for, that people were saying we needed, right? And so we may see the chart do something like this, move higher. We may see it move sideways a little bit and then move higher. Or if we just see this thing completely roll over, that's another possibility there. But when you're looking at all of these things, you're starting to understand the picture that the market is painting to you, and it's clearly painting a picture of rotation, okay? Rotation is very healthy and is what keeps bull markets alive. Now, we did have a negative divergence here on the 52-week highs versus lows, right? That's this chart up here on the top. And these divergences, they have noted and been a signal sometimes for sell-offs, right? Or also buying opportunities. Okay, we're not going to go too deep into divergences. Let's just do a quick brief analysis, right? We had lows over here, okay, and then we had lows down here. So we were making lower lows, but the S&P was making lows and higher lows in an uptrend. This ended up being a sell indicator, and you can see we pulled back afterwards, right? But after that, we had another divergence, this time a positive bullish divergence where we're making a low and then a higher low, but the S&P is making a low and then a lower low. That turned into a good buy signal. So we do have this divergence here, okay, where we're making highs, higher highs, but we're making highs, lower highs here. But if you take a look, we actually just broke out of this, right? So if this continues to head higher, it's going to void out that negative divergence that we've had and could void out any type of sell signal, sending the market back downwards. So, this is one thing that I'll be monitoring to see if we can continue to see this rise higher and get above 353 or come near 353. That's going to be a really good signal for breadth. Now, hopefully you guys enjoyed today's video. If you did, you're really going to love the Investment Intelligence private trading group. Okay, you can gain access to that via the link in the description. That'll take you to the Discord where I post 20+ swing trade ideas every single week. There's many custom scripts and indicators, some of which were featured in today's video. You didn't even realize it. We've got exclusive chart layouts. All of those charts that we just broke down are available to you guys via the Thinkorswim platform inside of the Discord. So all you have to do is, copy and paste the link to the chart that you want, and it will pop up right in your Thinkorswim, and you can save it from there. So that way you don't have to do any of the hard work and chart up all of these different things. Really, really great stuff inside of the Discord. I highly recommend you join. Otherwise, you can just sign up for the Investment Intelligence newsletter. Okay, that's completely free. You can get those emails sent directly to your inbox. And if you want to check it out beforehand, visit the website. Okay, check out the website, read some of the previous articles, and you can decide for yourself if it's something that you enjoy and something that you want to have sent directly to you. And if you really enjoyed today's video and you want to book a one-on-one session with me, okay, you want to book a coaching session, you can do that directly via my Ko-Fi page. You You just click on the commissions tab here, and in there you can book a 30-minute or a 1-hour session. I've done about 3 or 4 coaching sessions in the last week alone. So if that's something you guys are interested in, that's the best place to reach out to me, for that. Or if you're in the Discord, you can always shoot me a message and let me know. There's also this really cool buy a coffee button. It's basically a way to leave a tip or donation for all the free valuable content I put out, such as the newsletter and such as these videos. I really appreciate you guys watching, and I'll see you in the next one.